welcome back to the Chris and Lee Show. Ha 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 ha.
Dude, we're live on YouTube too.
Happy Tuesday.
On YouTube, happy Tuesday.
Tuesday.
Today is Tuesday.
Dude, is your mic even on?
Dude, I don't even know. Shit,
Do you even have a mic?
I don't even have a mic.
Dude,
are
you...
In
In today's broadcast, we're bringing you mortgage data. Mortgage data from the best minds in the world when it comes to real estate and lending. That would be the Chris and Lee Show.
That's the Jerry Cook.
Now,
you can't do that.
Coming to the stage, Chris and Lee.
What?
Woo!
Yeah, and the crowd goes wild. The crowd. I was on D&D. I'm already on D&D.
You already are. How come it's coming?
Yeah, I don't know. Who was it? Just people. Okay. All right.
Just people.
Should be able to get through.
So,
okay, so let's talk about. Okay, first off, found some cool shit out.
he found some cool shit
Dude,
out.
I found some cool shit out.
First time
about
ever.
Credit. So I'm on the credit algorithm feed. Now there's a couple things. One, you know the difference between a charge-off, and a charge-off and a collection? Mm-hmm. What's the difference?
Charge-off is settled. Collection is still active. Well, and you can have them both going at the same time, too.
Well, not really. What's up, Jonathan? Kristen, what's up? Yeah, I'm like, Chris and Lee. Who's Chris and Lee? We're Chris and Lee. I got
J Money.
I drink a lot, so whatever. So
He does.
Anyway, I found out that on
What is
credit. So here's an interesting thing. If they charge it off, then they have to send you a 1099-C, I think it is.
Okay.
If they didn't send you a 1099-C, they violated the law, but they charged it off.
So they took the benefit without passing it.
So once they charge it off, it becomes a taxable income to you, and it becomes an IRS problem. Do you know that? I didn't know that. Anyway,
I don't know the
person that I'm talking to says, hey, listen, if you didn't get the 1099-C, the first thing you need to do is go to the
Love and Life. Give us the
creditor.
balloons.
What's up, Love and Life? What's up?
What's up, Love and Life?
6.125 again? 6.125?
Yep. Same, guys.
Dude, 6.125, 30-year fix, 6.125, 15-year fix. Those are both FHA. They're the website quotes, not your quote. Your
From the internet.
Your quote. It's from the internet. You believe everything on the internet. You got to
Interwebs.
believe it.
Interwebs.
Interwebs?
Interwebs.
All right, cool. So anyway, you go back to the if they have to charge it off and they have to send you a 1099-C, and then it becomes taxable income. But once you have that, the debt is satisfied, which changes the game, because now you go and say, hey, listen, I got to satisfy debt. and I was like, wait a minute, because it became income to you. So now you got to deal with the IRS, but you don't have to deal with them anymore. They gave you income, so there's no longer a debt. It's a weird situation. Thought it was strange. Thought that was pretty cool. That's pretty cool. I was also watching the automobile industry. Like, there's industries that are crashing that I'm watching. Like the automobile industry, 1 in 5 is in foreclosure right now. 1 in 5. And remember the auto dealer strike? It's over, right? Kind of over. I think it's over. So inside of that, they slowed production down, but it lined up just perfectly with. We can't really sell that many cars right now anyway because the economy's in the tank.
Okay.
Right? Okay, cool. 85. We get some good.
Okay, JVISS. How you say that?
What's up?
Jizz. I make $85,000, 740 credit score, no debt, $30,000 down.
30K down.
Dude,
30K down.
As I'm reading
Shit.
the dissertation, dude, you're supposed to be doing the math.
I'm supposed to be doing math. I'm not
Math
doing
it out, dude.
6.125 is what the internet is telling us this morning for rates. That is not your quote. That is the quote that the New American Fund is giving us. We got to redo this with a
JVISS. You're close to about 400, 420 range, somewhere in that range. So call us, man. Let's get you started. Let's get you rolling to get yourself into
This is a really, really good time to buy a house. I'm
Why?
telling you.
Why?
Because that's what I was going to get to.
Why?
Man. But you keep interrupting me. You keep interrupting me.
sorry, Dad.
The automobile industry is kind of crashing. It's crashing. So the credit card industry, you know what's going on there?
Credit card industry?
Yeah.
Yeah, people are maxing their credit cards. They're using them. They have to buy groceries.
Like, how deep are we?
Let me see. I got an answer for this. Let me think. Highest ever?
1.1 trillion, last I checked, was last week. 1.1 trillion. So now, automotive industry's crashing. Credit card industry is maxed beyond what we've ever seen before. Commercial real estate, what do you think about that business?
Actually, I'm reading a lot that it's actually going to be coming back. Almost
How
like,
is it right now?
Almost like it's not hurting. According to my opinion, I'm in a probably, what is this, 50,000 square foot office?
Probably 50,000 square feet. Yeah.
Empty.
Empty.
So I think a
Empty.
lot of it is the same.
Empty. Of course, how many loan officers left the business this year?
80,000 thus far.
80,000. This used to be a very good industry. You can make a lot of money. I mean, like, I have a lot of loan officer friends that make $1 million a year. $1 million a year. No joke, $1 million a year. 80,000 people left the lending business, left the loan officer business. 80,000. That's crazy. Yo, is my mic on?
Yeah, you're good. Let's read this question real
So
quick.
yeah, keep going. Yeah, Chris.
Dominic, how you doing, Dominic?
What's up, Dominic?
Dominic just coming in
Dominic's
strong.
coming in strong.
Dominic said, "What are the requirements to go conventional? I
our
go
services.
FHA, but I don't want my spouse's debt to be a factor in my DTI. We are in a community state." Okay, so conventional 620 credit score. So same rules: 2-year work history, down payment as low as 3% for a first-time home buyer, 5% for most. You can put 20% down, not have mortgage insurance. So that's going to be your thing as long as you have 620 or better, meet those other qualifications. You need to call us, bud. Let's get you in the right
Yeah,
place.
let's get you. This is probably the right time. That's where I'm getting to. If you guys would just listen to me.
Dude, we got to answer the questions, though, man.
Dude,
Todd has a question.
I'll tell you what to do.
T money.
If you listen to what
T-O-double-D.
T-O-W-D?
That's what it says.
Dude, T-O-W-D, do it.
$740 a month. 740 a month credit score.
740 credit score.
8K a month.
8K a
income,
month,
no
got it.
bills.
No bills.
Ooh, what would his loan be, dude? 8 G's a month, was that $96,000 a
96,
year?
Yeah, we'd
Dude's
probably
almost
round that to
cracking 100 G's.
100 G's, dude.
Almost.
Whatever you're doing it good.
Keep
man.
going,
You're doing
Todd.
it good. Dude, $500,000 is real for you. $500,000 with no debt. $500,000. Ah, dude, I just got kicked.
Oh, man.
And that's our big one, too.
Hold on, guys. Hang with us. Hang with us. Don't leave.
Oops, I have the mic on.
No, we're paused. Shows here.
Really?
Yeah. It just says that we're paused. It doesn't say that we're gone. It's actually pretty cool. It says the host is away and we'll be back soon. In 3, 2, 2, 2, 2, 2, 2, 2, 3,
Back.
2, 1. Here we are. Yeah.
I was cussing and I forgot the mic's on. So
Oh, it's behind a little bit.
Recorded. All right, that's
right.
okay. That's
So
fine.
he's in a
That's
community property state. Okay,
fine.
back to Todd.
Sorry, we're back. We got a Wi-Fi issue.
Did you even answer, Todd?
I don't even remember, dude. I was
740
cussing
credit,
because of the
96,000,
Wi-Fi.
almost 100
Wi-Fi
grand.
made me cuss.
Wi-Fi made me do it.
Yeah, Wi-Fi made me do it.
I see dead people.
What?
I
Weird.
see people about to be homeowners. That's what I
Homeowners,
see.
dude, homeowners. And so there's this strange situation that's going on. I'm trying to get it out there, but you won't let me. Talk to Todd.
Todd, you told him. I think it's about $500,000.
Oh, $500,000. Todd, just call us. Anyway, the automotive industry crashing. The credit card industry, like worst ever. There are literally companies out there that are telling you to not pay your credit cards, not pay them, like $80,000 in debt. So what? Don't pay it. Trust me, bro. Trust me. Just pay me. Trust me. And then they negotiate it down for like 30 cents on the dollar. That's what they're doing right now. So commercial real estate industry, like you said, we're probably in a 50,000 square foot building, and there's what? A handful of people here? Not a lot of people. A lot of empty space. 80,000 loan officers left the business. Student loans. Oh my God. Check this. Student loans. They just changed the bankruptcy ruling so that you can discharge student loans in bankruptcy.
Wait a minute.
Yes, I know. Yes.
So
This
now
is
we
something-
can start
this just happened.
decaying federal debt?
Yeah, no. Student loans.
That's federal debt.
That you're right, it's federal debt.
category.
But it's that,
That
category. It just happened. It just passed the House.
Wow.
The president signed it.
Wow.
They do have to. You have to show that you have no likeliness of being able to pay it off.
Dude, that's like 90% of people with student loans.
Well, there's the first. They've just started using it, and like 98% are getting approved right now. So can you see what's about to happen? Can you just put the math on this? You go to doctor school. You go to school to be a doctor. And then, man, you're a doctor, cool, but you owe $500,000 in student loans. Have you ever pulled somebody with $500,000?
But you're starting at $250,000.
No doubt. But $500,000 in student loans is $6,000 a month in payments. That's a lot.
Yeah.
Even if you're making $250,000, you can, but you don't start at $250,000. When you're a doctor, you start with residency. Then you got to do all this bullshit work before you get to your own. Then you make $1 million, man. You make a lot of money as a doctor. Actually, there's a big shortage in doctors, but that's what I'm talking about right now. Cool. We got any more? Dude,
Yeah, we have a
losing
lot
it,
of them,
dude.
man.
I'm
8K
losing
can't
it.
buy you a shoebox in Cali, said Ryan.
It's a little tough, but we do have a condo in escrow for $240 right now.
Yeah, it's
$240,000.
Inland Empire.
Inland Empire, which is San Bernardino.
Probably about
San
20
Bernardino,
minutes
right?
from us, yeah.
San Bernardino. So we got a $240,000 condo, $240,000. $240,000.
Not a bad neighborhood.
It's an okay neighborhood. It was not like posh.
Yeah.
But it's also not like gat, got to keep my gun with me. It's not one of those neighborhoods
So
either.
if you already own a home and you're looking for
240,
your second or third home, probably not the ideal, but first starter,
Yeah.
100% in.
Yeah, absolutely. Condo, it's a condo. So that's happening right now. We got that in escrow right now. So they do exist. They are rare. It's really rare.
Martha.
It's like really rare.
Martha, how you doing, Martha?
What's up, Martha?
What's the
Martha,
credit score
Martha?
needed for 10% down on a bank statement loan?
Oh shoot!
I don't know that we could do 10%. Can we?
Bank statement loans. Well, I'm digging in for a client that I got like yesterday.
Is it Martha?
No, it's not Martha.
Okay.
So I'm digging in for a client, and he wanted 10% down, and I'm like, okay, shit. And I pulled all the stuff, and I've got an LTV of 85, but a CLTV of 95, which leads me to believe you can borrow that extra 5% or even 10%, and then do basically an 80-10-10. So because there's a CLTV notation on the guideline, I believe you can do a 10% bank statement loan, but you have to borrow the 10%. Yeah, or borrow the 10%. And it's a CLTV situation of 90.
Okay.
So, yeah, it's possible to do it. It's one of those things where I'm threading a needle for a client.
Yeah, I don't know, but call us, Martha. Let's see your situation. And figure it
Are
out.
you sure that's not our LOA? She's probably testing us.
Maybe.
She might be testing us. Todd, your internet stalled.
Thank you, T-O-double-D.
T-O-double-D qualified for. Thank you, Todd.
So
Yeah.
he didn't know because it stalled. So
Okay.
about $500,000, Todd.
$500,000 and then up. $500,000 and up. If you got a 740 credit score, that opens up a lot of situations. A lot of them. So the better your credit score, the better it is. Because I tell most people you're better off not going 3% conventional. The reason is the difference between a 5% conventional and a 3% conventional is the MI. It gets ridiculously expensive unless you have a really good credit score. If you have a really good credit score, the MI is negligible. So it kind of makes it worth it. But everybody wants, no, less down, 3%. And then loans are risk. There's a lot of math.
I'm going to share this with the world.
Share.
The world needs to know.
Share.
My first home had mortgage insurance.
What?
It did, guys.
No.
My very first home had mortgage insurance. Ask me if I have mortgage insurance today.
Do you have mortgage insurance today?
I do not.
What?
Ask me if I still own the home.
Do you still own the home?
I do. Ask me if there's equity in
Dude,
it.
I have to ask you all kinds of questions. Is there equity in it?
Yes.
What?
Ask me if I'm in a pretty good spot when it comes to this particular house.
Are you in a pretty good spot when it comes to this particular house?
I'm in a damn good spot.
Damn, you have to chill out. We're going to break the mics, man. Dude, you have to chill out.
Is this mic
the
on?
audience.
Is this mic even on?
Dude, the audience is going to go
Mic
crazy
check,
here. They're
mic
not going
check,
to want to talk
mic
to us
check.
anymore.
So
they're not
MI
going to ask us.
is appropriate sometimes.
Luda says, I need a construction loan. We all need one, Luda. We all need one. We all need a construction loan. Luda, come to the camera. Come a little closer. No, really, a little closer. All right, cool. We don't do construction loans. Sorry. Like to help you, but we don't. Yeah, we do regular. If you're ready to move in the house, we get you a home. If you're trying to build a house, that's a whole project, man. That's a general contractor, permits, all kinds of stuff that we don't know. We don't do it.
Yep. Dominic Gonzalez, what's the max DTI for conventional loans? Thanks for answering. You got it, bud. So 52 in very rare cases, 50 or 49.999 for most, 45 for the rest. Wow. So it depends on where you fall.
Can you say that again? Because that was rough.
52 for a very small portion of the population.
52?
52.
That's the front end or back end?
Back end.
Okay, 52 back end. Got it.
And it's going to be 49.999. Actually, it's
Okay.
going to be 51.999.
Okay.
49.999 for
All right.
a majority of people that have decent credit.
Got it.
And for those that have a little bit of challenges, $44.999.
44.999. Okay,
Yeah.
cool. How do you know all this?
I've been doing this a long time. I'm very good. Probably the best in the industry.
I'd say so too. Yeah, yeah. I think there's one guy better, but whatever.
He's just a lot older. That's all.
Cool. What do we got? What do we got? Because you paid 20% of your loan off, right? He actually what'd you do?
Refi.
Yeah, you refied.
Yeah.
He refied. Some people get mad at refis. Oh, they get mad like I'm doing them harm. I'm like, I don't do a refi unless you want to do the refi, and you have to have a good reason.
Yeah, but Luda, you're correct. If you pay it down from the original loan balance, you can then request it. If you're not there and you're taking advantage of a refinance, you can do it at that time too. So it depends on where you're at. You can make both those happen.
Crystal, 1983. I love that year. Some really good things are made.
Damn good year.
In 1983. Some
Damn good
really
year.
good things. So, how many bank statements is needed for a VA home loan? Oh, Crystal, have I got the news for you? Here's the news.
Give it
You
10
ready?
minutes. You'll hear it.
You ready?
Just wait 10 minutes.
10 minutes.
He's going to ask you if you're ready 95 times.
Are you ready?
He's going to ask you to listen 7.
Crystal.
You can say your name 8.
I don't even need a bank statement, actually. If you have VA loan, yeah, I might need one most recent. That's only to show proof of funds for something. But the VA zero down, so I don't have to prove your down payment. If you were able to negotiate the costs into, if you had a good realtor and they had the seller cover the closing cost and there's zero down, I don't really even need that. I just need to prove income. But we want one.
Did you just say realtor?
Realtor. Oh yeah, there's that slap meme, huh? There's that slap meme. Cool.
Whatever. I
Dude.
need a 25 million house in Pelican Hills. Hook me up, said Ryan.
Ryan, where's Pelican Hills at? I don't even know. Have you seen a $25 million house?
Have I seen a 25
Yeah,
million?
have you seen
from the
one?
street?
Like, from the street, yeah.
I've never been in it.
I've been in a lot of $1 to $5 million houses. A lot
been-
of them.
yeah.
A lot of them. I've owned one or two, but I've never been in a $25 million house. I'm trying to think if I have.
You've been in Playboy Mansion.
Yeah, that's a good point. Yep. Good point. We don't say that kind of stuff, dude. This is a G-rated show.
You weren't hanging out with Hugh Hefner in his heyday, I swear to God.
No.
I'm going through a divorce. Should I sell now or wait? Asked Marissa.
Well, it depends. Does your husband know you're going through? Marissa,
Is he aware of this?
First off, I have to make sure that Marissa is the female in this situation. 'cause
Spouse. Say spouse.
The spouse. Good. We don't want to go with male, female, because for some reason that gets us cancel. K-A-N sold. Yeah, K-A-N sold.
Canceled.
We got canceled. I'm from Kentucky. So
Yes, he knows. Good job, Marissa.
okay, that's good.
And it's a he.
It's a he. Okay. So yeah, she said it. Not or yeah.
You don't know if
I gotta
she's
be
a
careful. I know the spouse.
Marissa said it.
Yeah, Marissa. There we go. Marissa said it. So if your spouse knows you're going through a divorce, first off, that's
She.
Okay. So if your spouse knows that you're going through a divorce, you're already ahead of the game because half the spouses don't know they're going through a divorce until they're being divorced. Second is, depends on who is on the note. There's two things. There's a note and the deed. The note is what you owe the bank. The deed is who owns the property. So we got to figure out who's on the note. And then we have to figure out who's on the deed. Then we have to find out if you're amicable.
Yeah.
If you're amicable, a lot of things get solved. If y'all are fighting and you got lawyers, I'm the wrong guy to be talking to. Because I've seen it before where we don't talk. I only talk through my lawyer. I'm like, holy smokes. I've actually been the intermediary between two spouses that don't talk. I'm like, listen, it's better for you if you sell before you do this because you're going to destroy both your credit and you're not going to be able to buy a house, either one of you. But if you sell now, you both walk away with some money. You know what, Lee? That makes sense. I think I'll consider that. Cool. Let me talk to your spouse. You know what, Lee? That makes sense. Cool. Well, I'm game if my spouse is game. Well, I'm game if my spouse is game. Before you know it, I'm putting a therapist hat on. I am not a licensed therapist. I'm a licensed loan officer, but it happens. That's what happens. Cool.
Do you do therapy in Oklahoma?
Do I do therapy in Oklahoma? Dude, half our job.
Yes. We do therapy in all states.
Yeah, except
New York.
that's the only one. We don't do New York. Yeah. And I love New York. I love the city. Dude, it's crazy. New York is badass. So anyway, do we help in Oklahoma? And by the way, Neurally, look at all that stuff. That's weird. Hey, by the way, we end up being the therapist with most of our lenders. Or, I'm sorry, borrowers. With most of our borrowers, because they're like, well, I don't know. This is gonna make my wife angry or my kid angry, or it's gonna the Mercury retrograde is not good. So I was thinking, like, your last deal that you put together, the couple's like, listen, if God wants us to come together, they'll come together. and he's like, well, I don't know about the God part, but my part is the loan, and let me show you how this works for you, and what's happening in the market, and the good interest rate, and you want to move, and you want to be closer to your family. And they're like, God works in mysterious ways. You're like, I don't know if God works.
I know that this is today's rate.
I know this is today's rate, which is what today?
6 and 1/8, 6.125.
6.125. 6.125. Cool. Get qualified in New York is really hard.
Or something.
Yeah,
it's New York
for
has
the
a lot
bank.
yeah.
For the bank. For us, we just pass a test and then we just pay every year like $300 a state or something like that. It's ridiculous. But it's hard for the bank. So if the bank isn't licensed, then we can't do business. We work for New American Funding. We are direct lenders, a little different than brokers, but we're direct lenders. We have the broker ability, which means I can broker to Wells Fargo or Nation Star or whatever. I can broker to these places, but most of the time our direct lender rates beat everybody.
So cool. Marissa, I kind of want to piggyback on what Lee said.
Okay, cool.
So consult with your attorney, because sometimes when you're going through a divorce, you can't do financial things, big financial things. You can't even buy a car or shouldn't buy it. So just talk to your attorney, and we'll help you when the time comes. We're here for you.
But call us. We deal with this stuff all the time.
Luda, can you speak about buying down rates?
Ooh, Luda. Dude, I can't say that name
Luda.
Without thinking that. I'm like, Luda! And I'm sure they knew it when they picked the name. They're like, what's a name that will get me?
She knew.
That's cool. Yeah. All right. Buying down rates. When we price a rate, when we price a loan, we get a matrix. And let's just say today it's 5 all the way up to 8.5. So there's a 3.5 point range. 5 to 8.5. There's your par rate. Par means no cost, no benefit, or in golfing terms, zero. You're not asking for a stroke or taking away a stroke. You're I think that's scar. No, that's not par, huh? That's a scratch golfer. I'm messing up. You're the golfer, dude. Anyway, so you got 5 all the way to 8.5, and your par rate today is 6.125. So 6.125 is what you get, but you could ask for 5.5. And then I'll look at your schedule based off of your credit score, your profile, how much money you're putting down, all that good stuff. And 5.5, let's just say, cost you $6,000. So you pay $6,000 right up front, and now you have a cheaper monthly mortgage payment. That's called buying down the rate. And it's very common. In fact, it's more common than people know. A lot of loan officers don't even tell you you're doing it. You'll just find that extra fee in the LE or the CD, and they're like, hey, what's this? And they're like, oh, it's for the rate. Don't worry about it. And like they didn't have the discussion with you that you can choose your rate. Now, the other side works too. If you want if you wanted closing
like
costs. Yeah, I
asparagus.
don't know why it smells like asparagus. Weird. So if you wanted an extra $10,000 for closing and you didn't have the money, you could say, hey, you know what, Mr. Lender, can you give me $10,000?
Yep.
And I'll say, well, yes, I can, because I'm your lender. Well, we don't give it to you. The bank actually finances it in, and the rate goes higher. So instead of 6.125, you get 6.875, but you get $10,000 for closing costs. That's just an example. It's not the real number for you. But now you have $10,000, and you just pay a higher rate for that. That can come in very handy if you're thinking about a strategic refinance. Boom. If you're thinking strategic refinance, it's not best to always get the lowest rate. Sometimes you want to factor everything in and get an 8% rate, but $15,000 towards closing costs, and know that 3 years later you're going to refi at 4.5 or 5. So that's called a strategic refinance. Those are things that we cover when we talk with you.
Sweet. Mama Bear, what's up?
Mama Bear in the house.
She's looking to do a homestead. All right, you need some land? Okay.
Homestead.
But down payment is the problem. Yeah, I don't know if there's any programs for buying land.
Yeah.
That's real estate and land are totally different,
And
guys.
Mama Bear. Let's talk for a second. How many times did I say it? 5? 3.
Mama
Bear. So homestead. I have a house in Texas, my primary residence, and I put the homestead on it. The homestead exempts about $150,000 from property taxes, and that's the big advantage of homestead. Now the house is worth way more than $150,000.
Hey, Claudia.
So I only got a $150,000 exempted. What do you believe homestead does for you, Mama Bear? Tell me.
Luda, is 10 the maximum loans I can have on my credit? I think it's 12, if I remember correctly. Can you?
Are we talking loans? Are we talking about properties? Or
Yeah,
talking about trade
like
lines?
Fannie Freddie's.
12. I think it's 12.
12,
Yeah,
yeah.
at eight, the guidelines start getting real tight and the amount of lenders shift. So for those who don't understand, you can finance 1 without any problem, 2 no problem, 3 no problem, 4 starts to be problems. Once you get 5, 6, because if the market shifts, it could take you out. And at 8, a lot of my lenders drop off. A lot of my brokers drop off. When you get to 12, the guideline's insane. In fact, what kills most people when you get to that level is reserves, because the bank will go up to 18 months reserves on that many properties. So I think it's 12.
That lets me believe that Luda has some properties under the belt.
Luda. I have to say it right, man. Luda.
Rolando, I make 125 G's. Score's not good. Can I be a first-time buyer? What is not good, Rolando? Because our financing, we can get you in a house in the 500s. So
Yeah, 125K, dude. We can, if you've got money, and money solves a lot of problems.
dude, your Wi-Fi sucks.
Yeah, it does. It does. So money solves a lot of problems.
What is click and close?
I don't know.
Is that like a place that you go and click and close a loan?
Yeah, click and close a loan. Maybe you could do that. I don't know. It's weird. I don't know. So how is click and close? Oh, click and close? I don't know. We don't know what click and close is. Leo.
Tell us what click and
Yeah,
close is.
Cleo.
But you need a definite ROI on the time in the house. I agree.
ROI. Yes, you need ROI. For those who don't know, is return on investment. Now I sound smart.
What is a good down payment?
Well, depends. For some people, for most people that talk to us, they think a good down payment is 0. They think that's the best down payment. It's actually not. It's actually kind of probably one of the worst ways to buy a house. But if you get a house, you get a house.
Yeah.
But 0 is not the best down payment is 20%. By far 20%. If you can buy the whole thing cash, don't even watch the Kristen Lee show anymore. Just
Hang up.
just hang up right now.
Go buy up a cell phone.
I don't know how to
Slam it on the ground?
throw it on the ground.
Go like this.
Dude, I threw it on the ground.
Real hard.
I threw it on the ground.
No, stop
I threw it
calling
on
me.
the ground. Okay, cool. What do you got? You need a definite ROI. We did that.
Oh.
What's a good down payment?
Just answered that one.
Depend. Yeah, sometimes 0, sometimes 20.
Called above par pricing, which you don't have to disclose as a lender.
Which are called above par pricing, which you don't have to disclose.
You have to disclose everything.
Yeah, I was gonna say I don't know what NMLS number you have or LO school that you went to, but when I send out an LE, that's a loan estimate for those people who don't know, and a CD, I must disclose everything.
Okay, back in the day.
Oh.
Back in the day,
Okay.
there was rebates that brokers were
Oh,
keeping.
that's right. They were pocketing
So
it, man.
that
was
doesn't exist
dirty.
anymore.
Yeah, that was dirty.
Yeah.
That was dirty.
So
dude, this was
explain
a dirty business.
what he's bringing out. Tell the people.
Okay, so when you back in the day, it doesn't happen anymore, but back in the day, you could just kind of choose a rate for your client, and your client didn't know it. And let's just say you got them an extra $3,000, but they weren't able to use it. There's rules on legalities when you can't use money. So that extra $3,000, where does it go? Well, they can't legally pay the loan officer, and they can't legally pay the bank, but there's an extra $3,000. So they would make an extra side account that you could use towards somebody else's buy down the rate. Now, some real dirty banks
Or
would
their
actually,
Corvette.
yeah, or their Corvette. Yeah, some real dirty banks would give you a little bonus on the side. We didn't deal with any of that, but they would. This used to happen back in the day. They cleaned all that up now, and it doesn't exist anymore. This is a very regulated industry. It's really very regulated,
Dude, we have to recertify every single year.
right?
Every year. And if we don't, we're very regulated.
So I'm gonna try something. See the
I
amount of
need
viewers.
a
We're gonna
house
try
on
something because we got a
IT.
Wi-Fi issue. If you're watching us, thank you very much. We are about to click off and then go back live again because our Wi-Fi is giving us problems. So let's go ahead and click off real quick.
That's going to be the only one we click off on.
Yeah, it's only.
Everything else is still streaming.
Okay.
But that's this Wi-Fi.
I know. No, it's a hack I saw somebody do.
Oh, okay.
It says if you lose your audio.
Anyways, Instagram, Facebook. What's up, guys? YouTube. You guys are all still out there. You guys have any?
20-30 seconds to start doing its thing. Refresh that, and you should be able to see us live. You have to be on the URL bar to do it.
I did.
So we got questions. Go ahead and click the light. Yeah. So questions, and that. Give it a second. Yeah, close that. Sorry, guys, we're having some technical difficulties.
All right, guys, you guys need to get pre-qualified now, even if you're not going to buy right now, even if you plan on buying in a year or 2 years. If you get qualified now, you'll know exactly where you stand, and if you want to improve anything, you'll know exactly what you need to improve, and if you need to fix anything, you know what you need to fix, because there is going to be a hiccup, whether it's a lien or a credit score or a collection or a debt, or you don't make enough money, or your child support, or whatever it may be. There's always something that comes up that stands in the way of buying a house. Buying a house, for the most part, is easy if all the ducks are in a row. But for most people, they haven't planned for this. They haven't been thinking about it. So all the ducks aren't necessarily in the row. But that doesn't stop you from buying a house. Okay? So I meet so many people that out the gate they're qualified. They're qualified. Now, do they hit the amount that they want? Not necessarily. Not every time, sometimes. But at least they're qualified. Let me give you an example. So someone says, hey, Chris, I want to buy a $500,000 house. And all they're qualified for is $300,000. So we just get a cosigner to make up the difference, and they get a house. So it didn't work in that situation, but we have an avenue to go down to help solve it. And if you don't make enough money to buy the houses, because houses are expensive, guys, let's be honest. Luda, what did Luda say?
Luda says for 3.5% down payment. Is that you could do that?
Yeah,
All right.
but whatever you want.
But down to 3.
As long as it meets the minimum.
Yeah, that's the
As long
guideline.
as it meets the minimum.
Yeah.
So, and why would you want to do a conventional over FHA, Luda? Just curious.
Yeah.
Okay, so you should know this. Anything that has less than 20% down comes with mortgage insurance. It's going to have mortgage insurance, okay?
Rental properties.
Okay, I'll address that in a second. So it's going to have mortgage insurance. So at 3%, which means the risk is much higher for you and a